Good evening traders and welcome back to the channel. As you can see from the title, in this video I'm going to speak about why I no longer use a trade copier when I'm trading prop firm challenge accounts and also the funded accounts. Some of the most popular videos on my channel are talking about trading with trade copiers and managing large amounts of prop capital. After a few years of doing so, I no longer think it is the best way of going about your trading, especially if you are trying to diversify and trade with multiple different firms. I'm going to give you the reasons why in this video. Before we get into it, if you do want to see all the trades I take and maybe follow along and catch my analysis, be sure to check out the Telegram group. There is a link in the description of this video. So let's get into it. So firstly, I'm going to give you the reasons why copiers can be a good thing before then talking about why I've stopped using them. So the main points I used to use in the past were it's so much easier to manage 5 accounts or 10 accounts by entering on one account. So entering on your master account, it will then replicate those trades onto your slave accounts. So your master controls all the slave accounts. You can use different lot multipliers to automatically adjust the account size with your lot size. So if you're entering a 10 lot on a 100k master account, but you want to double the lot size for a 200k slave account, it could automatically double the lot size to match the account size, which is great. You don't have to calculate loads of different lot sizes. You don't have to enter on multiple different platforms. And it is an overall easy way of managing multiple accounts. And this is great if you are trading with the same firm, for example, with multiple different accounts. Having to log in and out of different ones, it can be quite time consuming and you don't want to miss any setups, especially if you do enter with market executions. And if you're a scalper, it can be even more frustrating having to go through different accounts, trying to get the right lot size when you don't have the time to do so. If you're a swing trader or a higher time frame trader, it is a lot easier managing the accounts, but lower time frame traders definitely struggle with doing so. And also one of the main benefits is that you can have your whole portfolio in one place. So the trade copier that I actually used to use, it showed you your portfolio total. So let's say you had $1 million in capital, I could see $1 million. And then it showed me the return on that $1 million. I could see all the stats from all the accounts. I could see the stats combined from all the accounts. So it's basically like having an investment portfolio or your net worth of prop firm capital or all your trading accounts all in one place. And you were able to trade personal live accounts, so your real money, alongside prop firm challenges and funded accounts too. So you could have all the different account types in one place, which is very, very easy. And you'd only have to enter on one platform to then enter on every single platform. And that's kind of the main reason why people actually use them. And they are cheap too, which makes it even better. But now we're going to get into the reasons why I no longer use trade copiers. And obviously I praised them for the first few minutes of this video, but now we're going to talk about the cons of using trade copiers and experiences that I've had in the past, notably bad experiences. So we're going to start with a very simple point. If I'm trading challenges, I usually trade more than one at once. And there are many different reasons for this, but the main one is I like to split up my risk. So I give myself a budget. Let's say, for example, my budget is $2,000 to take a bunch of challenges. Instead of buying one large account, let's say a 400k account, for example, which would probably charge around $2,000. I'm not going to do that. I'm going to buy 4 accounts that cost $500. So that would be 4 100k accounts. And people will say, oh, but you're getting the same amount of capital. Why don't you just go for one account and just pass one instead of trying to pass multiple? But the reason behind this is that when I'm trading with different accounts, I can take trades on one account. Okay, if I hit a winning streak, that's perfect. I can pass that one. But let's say I hit a losing streak and I get some slippage or something as well. If I then blow an account, I still have 3 more chances. If I blow 2 accounts, I have 2 more chances. So every time I go with these 4 challenges, I have 4 chances to pass a challenge and then get a payout. And obviously, risk to reward wise, if you're failing 3 challenges and you pass 1 and get a payout, you can wipe out all the losses with a 3% payout. And obviously you still have that account after that, so you can continue trading that account too. Whereas if you're going in $2,000 on one challenge and you fail that, you're then left with 0 because you only have 1 chance to pass. So by splitting up the different trades and different accounts, I'm covering my downside because a losing streak will only affect 1 or 2 accounts. I am making it so that I give myself more chances to pass the challenge before blowing the account basically, because I like to go slightly higher risk, 2 to 3% risk on the majority of my challenges I'm taking. So I know that I only have 4 or 5 trades before the account is blown. But then I multiply that by 4, I then have 16 trades or 20 trades before I can lose all of the accounts. So it kind of makes it perfect for my style of trading to not go in full risk on multiple accounts at the same time, all linked to one, because then, like I said, it gives you only one chance. And another reason for this is, let's say I had those 4 100K accounts linked together. So they were all taking the same trades, but they were all different firms. I did this early last year and it was a disaster. I didn't realize the difference in trading conditions between very, very similar prop firms. They seem to have similar market conditions, but let me tell you something right now. The majority of prop firms that you are trading with are trying to sabotage you. The trading conditions are horrendous, and I'll give you an example of this. So I had 5 accounts linked on a Copier. I had my master account, which was my favorite firm to trade with. It had the best conditions, it had the best spread, it had everything perfect, and I was confident in its account. So that was the one I was trading. I would take the trades, I'd set a limit, and obviously set the stop loss and take profit at the same time. And it's for copy over perfectly. On my account, the main account, I would get tagged into the trade. It might go into drawdown slightly, maybe come near to the stop loss, but obviously didn't tag me out because I would know about it. And then price would drop, great, I'd hit take profit. I go check the accounts. 2 of the accounts have hit stop loss, but I go on my other accounts, they've all hit take profit, apart from 2 accounts. So now, when I win 3%, when I lose 1% for this example, right? So let's say 3 of the accounts have made 3% profit. 2 of the accounts have lost 1% profit. So now there's a 4% difference in the account balance between the accounts. So now I'm going to have to take into consideration that difference when I'm trading. Because also, all of these firms will have different drawdown rules. They'll have different max daily drawdown, they'll have different equity or balance-based drawdown, and you need to kind of be mindful of this too. Now 2 of the accounts were down 1%, 3 of the accounts were up 3%. So on 3 of the accounts, I'm risking the profits. Whereas on the other account, if I lose another trade, I'm even further in drawdown, when I should actually be in more profit. And I also had another situation where 3 of the accounts didn't get tagged in on a limit, and 2 of the accounts did, meaning that they hit take profit for 3%, so they're up 6%, and the others 0. Obviously this is expected because you are trading with different brokers and they are different conditions, but when price is tagging you out for stop loss on multiple accounts, but the majority of accounts aren't actually getting tagged out for stop loss, it is quite frustrating, especially when you have targets to hit, and making 10% and then 5% is not an easy target to make. As you know from the failure rates of prop firms, it is in the probably 90%. And to pass any challenges, you're doing quite well. And let's say you're buying challenges and the trades should be working perfectly, but they're not because the trading conditions are terrible. And because they're linked, you can't do anything about it. You're just trusting that the trades are opening all the accounts. So by not using a copier, I could have managed each position and accounted for spread each time, but I wasn't able to do that. So I was trading assuming that all the trades had been tagged in, or all the trades had not hit stop loss because the master account hadn't either. The only way to really go about this is to adjust the conditions on the master account so that all of the other trades on the slave accounts are given extra breathing room, basically, which reduces your risk reward, and you end up making basically less profit if you do win, which is, again, another issue. So you need to be very mindful of the spread and the slippage. Slippage obviously varies per broker, and I've had some crazy slippage over the years. I would risk 2% and I'd lose 4.5%, or I'd lose 5% on the trade. And risking 1 or 2% on the trade and losing 4 or 5% is not fun, but you can't control this. One broker could get you perfectly on the stop loss and you'd lose 1%. Another one you could lose 2.5%, especially if you're trading at gold or you're a news trader or something like this. This can happen very, very easily. And you can't control how much you're going to lose. One of the brokers could slip you 0.1% every single time. Over 5 trades, you've lost an extra 0.5%. If you're limiting your drawdown and trading a master account, but every single account has a different balance, it's very hard to manage your risk when you are in drawdown, when you're trading with a max daily loss, when you're trading with a max overall loss, when you're hitting specific profit targets. Let's say your main account hits 8% profit, you close the trade, or it closes automatically. The other trades are $100 under, $200 under because of different commissions or different spreads or different prices. Now you've got to then pass those individually. So the reason I'm not using them, the main reason, is I'm trading the accounts individually to split my risk, to make it easier for me to pass. It may take longer, but I'm giving myself the best chance possible to make it work as a business, to not make it work as oh, I want all my capital in one, I want to claim that I'm trading 2 million in one account. That's not the goal here. The goal with prop firms is to have as much money go into your bank as possible. Not to get the most amount of funding, not to spend the least on challenges. The main goal with prop firms is to have as much money possible go from that demo account to your bank account. And if you're not doing that, then you're not doing well with prop firms. Too many people focus on spending very, very little on challenges, or keeping an account for the longest, or failing not many challenges. But if they're not withdrawing as much as someone who spends more on challenges, buys more accounts, and gets more payouts, then does it really matter? No. I don't mind spending more on challenges because I know I get paid more when I get a payout, and it covers a lot of challenges. I have multiple $20,000 payouts from 100K or 200K accounts. And if you do the maths on a 200K account, it's around $900, $1,000. That's 20 accounts I can fail for one payout. And I've had 3 payouts of 20,000 from one firm. So that means I've had 60 opportunities to pass the account before I'm even break even. And have I failed 60 200K challenges? Absolutely not. So I'm obviously profitable just from those 3 payouts. And even all time, 1 or 2 of those payouts would cover all my challenge fees. But let's say I put all my challenges on one account and I used all my capital on trying to pass them all at once, I would have failed. And it's as simple as that. I would have failed. I've tried it failed for me, and I'm no longer going to do it again. Let's say I'm trading with a personal account and I'm linking it to one other prop firm that I know the conditions are perfect, then that'll be fine on a funded account. I'm happy to do that. Or same firm, multiple accounts, I'm happy to do that. But different firms, different accounts, different brokers is something I will no longer do. So if you have any experiences with trade copiers, be sure to leave it in the comments down below, and I'll catch you guys in the next one.